Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick on the show today. The theme of the show will be the anti-hurricane trade. We said it on the show last week. If Hurricane Irma was anything less than a catastrophic disaster, we're going to see a lot of the trading action from last week reverse itself, and that is what we're seeing this morning. So we're going to talk about the results of over the weekend, the storm, and trading action as a result of that. That'll be the main topic of the day. We'll also take your questions in the chat. And then at 8:35, we're going to be joined by Sean Udall. He is the tech stock strategist and the CIO of Quantum Trading Strategies. Joel, how are we doing in the markets?
We're doing fantastic here. We're up 11 points, 23.75 in three quarters. That's up 11 a quarter. Pre-market high 76.75, folks. We have a chance of a new all-time closing behind the S&P today. Basis the December contract. Remember, folks, we rolled over. That's 24.72 in a quarter. So we'll be keeping an eye on that level as well. We have crude up 18 cents. Not much of a reaction there at 47.66. Gold and silver peeling back a little bit. Gold struggling at that 1350 level. Got a little over it on Friday. We're now below it. And silver couldn't hold 18, down 27 cents at 17.85. So, Dennis, it's all about the hurricane, or should I say it's not about the hurricane? A lot of things were overdone on the basis of this being, a Category 5, and that's not the way it turned out.
Yeah, and that's good news. I mean, obviously, for some of those, countries that got hit when it was a Category 5, it's not good news down there. I mean, Cuba took it pretty hard there, too. And but obviously, Florida did not take it as hard as expected. I know it's terrible flooding. We feel, very bad for all the people who are affected down there, who got displaced, whose homes are flooded. But the way they were talking, as a catastrophic event. And, I was really worried. We were all worried that this was going to hit as a Category 5 and do some massive damage, like level. Originally they were saying it's going to be a direct hit on Miami. And, it's going to, maybe, level a lot of buildings in the city if it hits as a 5. But it didn't hit nearly as hard as everybody thought it was going to. It probably took one of the best paths it really could take, because it started cutting through, through the middle. The eye started breaking down, sparing Tampa, sparing a lot of different areas. So it was not a catastrophic event, in the way that the market thought it was going to be last week. I mean, if you look at those reinsurers, and that's what we were talking about all last week, some of these fell 25 to 30%. Which is basically pricing that this was going to be a major catastrophe and they're going to pay out hundreds of billions of dollars. It doesn't look that way here now. I know it's still ugly, a lot of flood damage. We hope everybody's okay. Fari was down in Naples. Yep. We hope Fari's okay as well. And I think I have seen a tweet, so I think he is okay. But that being said, these reinsurers that were going down 25 to 30% last week were getting priced like they were going out of business. And it's just not the case. And they are bouncing back hard this morning. I mean, bring up Everest RE, and they have some exposure, a lot of exposure down in Florida. Stock went from $250. So it started the week at almost $250. It went down to $210. So you're talking about losing 40 points or almost 20%. It bounced on Friday, and that's what you were pointing out too, Joel. A lot of these insurance companies bounced Friday afternoon. I think when they said Miami wasn't going to take the direct hit and it was going a little bit farther west, some of these started to get a relief rally. That relief rally is continuing big time. I mean, major here this morning. Already went from 250 down to 210. It rallied on Friday to close at 222. It's up 10 points today. So it's trading right now at 232. So getting back over half of the losses from last week, because it's not going to be paying out, the amount of catastrophic funds that they thought they were going to pay out. Same story with a lot of other ones. HCI, it's bouncing back here this morning. It's trading up significantly in the pre-market, up over 8%. HRTG is another one with major exposure in Florida. It's up 14.5% here today. So, you look and you can say, oh, well, why are these stocks all trading up? If you're not in the markets, you'd be saying, why are these stocks trading up with all this damage that's down in Florida? Because they were pricing it like it was going to be a lot more damage. So the damage came in less than expected. Just like an earnings event, we were treating this when we were trading it. If it came in less than expected, these stocks were going to catch a bid. And that's exactly what you're seeing this morning.
And of all the days for me to schedule Fari to be on the show, a couple of weeks ago, I scheduled him to be on the show today. We were in touch with him Friday, and obviously he was taking the precautions. He hunkered down. Fari, if you're out there listening, we hope things are well for you and your family there, and we're going to try and get you back on later this week. I was looking, and I talked about this on Friday. I was looking at some of the options on these things if you wanted to play the contrarian move. And there was just so much premium jacked into those things that I'm sure you could probably, if you went in the money, you might be getting a little bit of a pop now. But boy, a huge overreaction. Dennis, how do you trade these things now? I mean, if you were short of that ahead of it, let's say in something like this UVE. If you were short, all your profits are gone overnight. I think if you tried it, if you tried a daring long on this, you're getting exactly what you expected. UVE $20. That was your high on Tuesday. We traded near there in the pre-market trading, so I'd keep an eye on that. But above 20, there's a gap between 20 and 21.
You know how I'm going to be playing these, and I've already been playing it a little bit here this morning. I did get up. I did have a nice couple of trades here. So I got up at 4 a.m. I was like, I'm going to try to buy some of these reinsurers if they're flat. There was nothing available in reinsurance, and there was no markets, and people were already bidding them up. But you know what was trading up? Home Depot and Lowe's. I'm like, you know what? Home Depot and Lowe's trading up on this news. I'm like, they were expecting a catastrophe. I'm like, I'm shorting those. So I did get short. I didn't get the Lowe's. I did get some Home Depot off, shorted some stock, I think at 160.5 and upper 160s, like 160.80. Still in part of the trade. I just covered some of it just a few minutes ago. And I'm up already $2.50. And I'm going to cover the rest of it probably, pretty soon here because it's coming back in here now. I'm hoping to cover the Home Depot on the 157 handle, maybe lowers, and maybe I'm going to hold out for a little bit more. Like I said, I covered part of the position, maybe take some more of it off. But, it's an opportunity because, there's people that are coming in, and it was trading up from like 4 a.m. till 6 a.m. I went and checked the tape. Not on the crazy volume, but it was priced in more for a catastrophe. So it's not surprising to me. Like some people are going to say, why the hell is Home Depot down? Well, it was up $10 on this, and now all of a sudden, it's not as much, and there's not as much damage to the structures as they expected. So it's not surprising to me that's drained down. That's why I shorted this morning when it was up $1. And I'm almost making 2.5 points here because I made a call here at 4 a.m. this morning that I thought Home Depot would give it back, and I thought Home Depot would go in the red today. And by the time I woke up, so I got up at 4 a.m., put the short on, back to sleep till 6:30. When I got up at 6:30, I was already in the money.
That is the way to trade. Yeah, we were texting just after that 6 o'clock open, and you had your percentages and your plans. Way to go, Dennis. Let's look at Generac. Now, they're still going to be selling some generators there.
They are.
Yeah, but that stock, big run ahead of it. But you know what? Yeah. People started – I bet you those people that started this thing on Thursday and Friday, they must have a better weather tracker than CNN and Fox and who else was covering this? The Weather Channel. I mean, they almost act like they're disappointed that it wasn't like a bigger hurricane. I mean,
Joel, like they did, and Eric Hunsaker just tweeted this out. If you listen to Eric, I know Eric listens every once in a while. I've been following your tweets, and Eric's been all over a lot of tweets this morning, but I'll just read you an Eric Hunsaker tweet. And this is exactly right. So he tweeted out, computer forecasting models for the Hurricane Irma performed abysmally. I think they put too much emphasis on historic tracks, and maybe that's what they did, but they did not forecast this thing well. I mean, originally it's going to have a direct hit on Miami. Then, and even when they were live on CNN, as it was kept going west in Cuba, he's like, it's going to turn up north soon. It's going to turn up north soon. It turned up north for like 4 more hours after the guy said that. And then it took the westerly route, and then it cut across. They just didn't call it. They kept trying to adjust at the last second, but they just didn't do a very good job really calling where it was. I mean, they had everybody evacuate Miami, move over, go to the West Coast. You're gonna be safer over there, and that's where the eye hit, originally. So, obviously they changed it, 24 hours before, but if you're in Florida, you must be scratching your head as they're telling you the eye is going to hit Miami. Now the eye is going to hit the other coast, and with such a big hurricane, it hit everything, but. obviously, in the major, damage probably going to be where, the key, we knew the keys were going to be in trouble, but I don't think, somebody like Fari, who was in Naples, originally he was on the other side. He was going to be a little bit safer over there, and that's where the eye ended up coming. So I didn't think they did a good job either forecasting it.
I think a lot of it just has to do with everyone is sort of on high alert after Harvey, and everyone's very, very sensitive, and I guess for lack of a better term, trigger happy when it comes to being overly cautious, I guess is the term I would use. Overly cautious. We just had Harvey destroy an entire the fourth largest metropolitan area in the country. So I think that may have played a part in the overly cautious evacuation of the East Coast, the West Coast. I have family out in Fort Myers, right, the West Coast of Florida. They didn't get out until I think Friday evening. They call it like the last flight out. It was like Friday evening or Saturday morning. Something absurd. They were like still there, and then only at the last minute did they really like get out of there, because it wasn't clear that that's where the storm was going.
No, as of Thursday, it wasn't even like they were going to get some of the some of the flooding. They were still going to get some stuff over there, but it wasn't going to hit on the direct. That's where it ended up going. Exactly.
So and obviously forecasting storms is not an exact science. It's very difficult.
And it's probably very difficult to do. But I just thought I thought they'd do better than that, to be honest with you. But maybe it's a difficult thing. I mean, there's so much going on there. I guess it's pretty impressive that they just know it's going to cut north regardless. So I guess we should give them credit where credit is due. I mean, they still got it generally right. They just couldn't get it nearly exact as I thought they could get it.
Too bad you just can't like short, storms or whatever. I mean, I guess you could do certain things in the market, but when
you could have, could have bought all the insurance companies and could have shorted all the ones that are going to do the cleanup from it.
The pivotal moment for me is Saturday morning. I got up really early, did a swim, even though it was 40 degrees out. I came home and Lisa said, I don't know where she got this information. She goes, "Did you hear that Disney World's going to get destroyed?" And I'm like, Disney World is going to get destroyed? I mean, and that was before they already said it was like tracking west. So just like the rumors and the innuendo and the things. But the most important thing, I know there was some loss of human lives with, we hope that, people that are down there are cleaning up for the storm and, less damage, better. Definitely create some opportunities here in the markets. And, if you're playing it a contrarian way, because that was the only thing I was thinking on Friday when I was looking at these reinsurers. I should have just done it with bought just a little amounts of the stock to do it, because like I said, there was absolutely nothing in the options market.
They were jacked. Those premiums were crazy. I looked at them too.
Yeah, there was no free lunch out there in it, but let's see what happens today. I mean, if you're long these stocks, look at the momentum, look at the pre-market highs, and you just want to see, continuation through those levels. Also, you could figure retracements on something like this RE. I mean, is he going to get all those gains back from 250 to 210? I mean, it's already gotten over 20 of it back. So a lot of scrambling here. It'd be interesting to see how these things end up today, because I think anybody that did stick out and buy these stocks is probably going to ring the register, right? I mean, I guess Jose is not really developing into much either, right? Nah, I've heard.
We don't know yet. That's a wild card still, too. Spencer, were you going to say something about that?
I was going to say I haven't heard about Jose in a couple of days.
It's hanging out there, and there was a tweet going around last night. I'm not sure if it's real or not, because I don't know if it's coming from a credible source. But they were saying it could spin around for a few days and still come in, and there was one model that had it hitting New York. Now, I don't know, all these models go all over the place. The thing's way out there right now. That was what some tweet was going around last night. I'm not sure if that was a credible source, though. But, it's still a wild card. I mean, we're still in hurricane season. And that's what I was going to get to, too. When you look at all these reinsurers that are going to have a massive rally here today, we're still in hurricane season, and they're not completely out of the woods. I mean, they went through this one. But if they get just silly today, and they, rally up and get all the losses back that they had last week, I think there's an opportunity on the short side then. So, like, I'm looking at RE, it's now up 11 points. I mean, I've already got back to the 250 from where it came from. Not saying it's going to do that tomorrow or today, but, and it's volatile like crazy right now. I mean, funny things happen. These things get if any of these reinsurers, so I'll give you a whole list of them here. I was looking at HRTG. I was looking at, UVE. I was looking at AHL, which I actually own in my investment portfolio. I was looking at RE, which is Everest Re. I was looking at RNR. I mean, for RNR, for instance, it's already bid 132.40. It came from 140. If that gets anywhere back up to 140, Joel, I'd be ringing the register along for sure. And I don't know, maybe another hurricane comes around.
Yeah. Is there any market? You said the R&R is already.
There's no market in it. It's 132 to 149. Okay. It's too early, but there will be a market in this at 930. I'm just saying if it gets just silly, here's the stock that went from 140 to 120. If it goes all the way back to 140, I mean, there's still it's a point here Jimmy A was saying, there was still, reinsurers were still going to have to pay out some money for Harvey. There's still going to be some money that they're going to pay out for Irma. And there could be more storms coming. So, it's an eye-opener for me because I've held the one reinsurance company in my portfolio there. Like, look at R&R right now. Like, come on. Like, these things, somebody just bid 139.65 and it just actually just traded there. It just traded up $10. Come on.
That's a little
I'm on the live radio show. I wish I'd been quicker. I'd have hit that. But anyway, as I'm talking live, R&R just trade up to 139.65.
I saw that.
It just traded $10. It traded up back to where. Well, that's saying if that happens, I'd be selling it up there. It just happened right here. I'm saying the sentence. Just 200 shares, but that's it's already offered down $1. I'm like, somebody was went, that's craziness. Okay, so there's opportunities there though, guys. This is just. Okay, so Johan wants me to repeat the list.
Yep.
So everybody automatically assumes, and there was a great Wall Street Journal article. Just let me go find that article for you over the weekend. It was and he was explaining how these work. I'm just going to go grab the article. Where is
you read the Wall Street Journal, Dennis?
It was Jeffrey Rogo, and he wrote an article, and I can treat reinsurers will largely be writing the checks to pay for the Irma damage. And he gave a whole list of stocks in there. Here, I will actually just send this out. It's in my Twitter account if you want to find it too. But in the chat here, I'll put that article there. It explains how it works. And a lot of people automatically assume that it's all the big names that are paying the bills. But they all, send it out. They get insurance. So that's why they call it reinsurance. Because the insurance providers are buying insurance that if these catastrophic events happen, that they're not going to be footing the whole bill. So, people think the Allstates and the Travelers are the most exposed. It's not the case. The reinsurers are the most exposed. And I'm going to give you those lists right now. Now, these are the stocks that are going to bounce back hard today because they're not going to pay out nearly as much as what they were thinking they might have to pay out last week. But R&R, which I was just talking about, is one of them. That's Renaissance Re. Everest Re, which is out of Bermuda, I believe. RE, that's up $11 right now, up $12 now. Trading at 235. RE, that's a huge bounce too. I mean, if it got back up to 245, 250, I think it's an opportunity on the short side, maybe. Maybe it's an overshoot. AHL, Aspen Insurance, I own this one on my investment account. I cannot believe the way it was annihilated. And that's what I was going to say. It's an eye-opener for me to own these things because I've had that in my portfolio for like 5 years. It's a stock that doesn't even do much, pays me a little 2.5%, 3% dividend. And all of a sudden lost like 20% last week. I'm like, what's going on? Are you getting out,
Dennis, at 49 here? Is that a right print in AHL? Oh, no.
No.
Okay.
No.
Okay.
Oh, yeah, it is. Yeah,
no way.
That traded 49.30. Who's doing that? Holy cow. There's some opportunities for just craziness here, guys. They trade a lot of stock up there. That's a fat finger on oops. Man, why am I doing a live radio show?
I know, Des. Do you want to go? Because Spencer.
49.35? Come on, guys. Come on. Don't buy a insurance company up 25% in the pre-market because the storm didn't hit hard. Like that's getting around the other. Already offered at 44. This thing traded 444. It traded like almost 10,000 shares up at 49.35, up $11. That is insane. It's not going to see that today, guys. I'm not going to see 49.35. I own the stock in my investment portfolio. I've been ringing the register. I've been selling it right there if I could have sold it there in the pre-market. Does that mean it can't go up a little bit here? No, it's going to rally today. It's bid 40. It was ridiculous that it got down to 38. I think, in the 43, 44 is like a happy maybe where it should be. 49.35 is absolutely ridiculous. It's a way overshoot. This is where your money is being made right now, guys. You want to talk, always movers, and you want to talk about, what's moving. There's a stock that just ran, just printed up 20% here on,
that's crazy.
Pretty volume.
I wonder if those prints are going to, obviously it's a pre-market.
They're probably going to hold.
That's a big
if they're
trade.
In, range. I mean, they're going to be wild. This is a repricing of risk. They priced it last week as if these companies were almost going to be in trouble, which was ridiculous too. Now they're pricing them like they're not. Oh, they're right back, and they're going to take them right back to where they came from in one day. Well, that seems ridiculous as well. So I think that the middle ground is probably where they should be. They overshot last week. Well, they might overshoot to the upside. It looks like this week. at least some of them here. So just be careful if you're trading these things, because it does look like some people are going to get really excited here this morning. And I don't think any of these stocks should be up 25, 30% because the hurricane didn't hit as hard as expected.
And just real quickly, stocks that could be under pressure that had nice runs last week. I'll just run through those real quick. Home Depot, that stock, great run, added $10 last week. Dennis, I'm glad that they made a market for you on that one. That could have some downside pressure on it. Also, Lowe's was a stock that got a nice boost from it. Ran, if that gets back up to the 78.50 area, folks, that's been an area of resistance for quite some time. Generac, your Generac traders, they got in early and they were selling on Thursday as well as Friday. Gains to perhaps still get back. You always look 36 to 44, 8-point move. Maybe this comes back into the $40 area. But just overall, just take a look at your highs through or your follow through your pre-market highs and lows to see if these moves are going to continue. Dennis, we got 20 minutes here in a hurricane talk. Do you want to move on to some other morning movers?
Yeah, I just want to give a few more, stocks because we've talked 20 minutes. I know we've been sticking a long time on it, but there's just a lot of stocks that are affected by this. The cruise lines got killed last week. They're bouncing back hard. CCL, RCL, NCLH, all having huge days this morning already, up 1% to 2% each. Some of your airlines really got annihilated too. Would not be surprised some of the airlines catch a bit here this morning. I do see LUV trading up. American Airlines is trading up. DAL, Delta's trading up about 1% right now. They're getting a little relief rally. Gold and silver are getting the beats because we know everybody's fleeing to gold last week. Gold is down significantly here. And then I just wanted to say the rental cars. Hertz and Car both had huge run-ups. They're wild, though, because people are still going to have to maybe rent some cars. I saw a lot of car damage. I saw a lot of cars underwater. So that's kind of an iffy one. But they did run up very heavily last week on this hurricane as well. If it's the counter hurricane trade, some of them could give it back, but I did see a lot of cars underwater. So maybe that, is a little more justifiable than some of these other, like the ridiculous moves last week were the reinsurers when they were pricing them out of business. And that's why they're coming back hard. And Lumber Liquidators, Spinner, thank you. Lumber Liquidators was another one that had a huge run up last week as well. Flooring, obviously, and LL is trading down 60 cents here in the pre-market. So a little bit of the anti-hurricane trade going on here as well.
You know what else caught a boost last week? And I was thinking there's a little bit of stretch. Did you see Campbell's Soup?
Yeah, it did. I did see it bounce back a bit after that horrible report. They were saying, people are going to be, eating, out of canned food here for a while. Not going to be going out to these restaurants that are all flooded. Campbell's Soup CPB did get a little bit of rally there too. I think you'll see a little bit of that, maybe give it back as well.
Kellogg's too. Some of these food stocks.
They did.
Yeah.
The food stocks ran up. They're defensive.
Right.
And you're not seeing, you're seeing this market move out of, defensive issues here this morning.
All right.
Great point.
Maybe they're moving out of the defense issues and into Apple here, Dennis. Apple trading up $2.02 here in the pre-market trading. A lot of hype over that $1,000 iPhone, right?
Well, so give us the details.
It's rumored that's going to cost as much as $1,000 for the.
And then we're going to find out. Is we finding this out tomorrow?
Yes.
The event.
So when is the Apple event? Give us the details.
The event is tomorrow. It's 1 p.m. Pacific time, I believe, which is of course 4 p.m. Eastern. And it's the 10th anniversary iPhone event. So they're revealing some special new iPhone. That's pretty much all that there is to know. It's going to be called the iPhone.
They keep
X,
everything somewhat secretive there. There was an article in Barron's, though, you were saying, Joel, on the Apple phone, how this actually is going to be bad for the telecoms.
Yeah, we were looking at the telecoms last week and just how they were getting annihilated. And, they're really, they're defensive issues. And basically, you should read the Tiernan Ray article because I don't want to not do him justice. But basically, with the new iPhone, what they're expecting is that the iWatch, you are going to be able to connect to the internet even if you don't have your iPhone with you. And so it's another device with the SIM cards that will not be perhaps I don't know where they're going to pull the data in or the wireless connection, but what they're looking for is, a big movement away from these handheld phones. And this is something Gene talked a lot about when he was in the office. So big changes, that's what they're expecting. And man, the way they hit this AT&T and Verizon last week, you would think they were going out of business. AT&T filled the earnings gap. Verizon sure on its way. So a lot is, dependent on what happens, at the event, a lot of anticipation. A couple of you asked about getting Gene Munster on before the event. I did talk to Gene, and he has contractual obligations with CNBC, so he cannot come on until after Tuesday. He has some other commitments on Wednesday, but Gene will be on the show on Thursday morning, and I think that'll be a good time because the stocks have already traded and, a little bit of price discovery, so he'll be able to gauge whether it was an overreaction or underreaction. I just want to note for our Apple traders here, trading up 202 at 160.65. Pre-market high is 161.02, or excuse me, 161.04. And that's right up there with Friday's high. So you had a string of lower highs. Let's see, that get through 161.15. That was Friday's high. Then things open up to the 162 handle. But a couple bad days and Apple getting a lot of gains back here. We'll see if it can get back up. 164.94, that was your all-time high. So keep an eye on Apple shares today, trading up $1.98, 160.61, and that's quite a bit more than the S&Ps are. So Apple getting a nice boost.
I also saw on Barron's cover story Nike.
Oh, yeah. I mean,
What'd they say?
Just don't.
Just don't. Instead of just do it, just don't.
Yeah.
That's what they call it.
Yeah. Yeah, that was a pretty bold call here.
This would have been ghetto like a month ago when it was up at 60. Now it's at 52. Aren't they a little late to the party?
They just think Adidas is moving in on their turf and that they're really grabbing market share. I mean, retailers, Nike, Under Armour, Adidas. I mean, I wear all of them, so I really don't have a preference. Let's just keep an eye on Nike here. It's sitting on the lows in the move, $52 here. Got a little bit of a pop. I don't know. I mean, between 52 and 51, there's not a lot here, but you have a negative article, but you got a strong market. So Barron's making their call. I don't know, especially after stock has went from 60 to 52. I don't know if I'd be out there shorting this thing on the opening bell.
And not a lot of people are actually. Nike is still trading in the green despite a negative article. You usually get a negative Barron's article, knock a percent off it, but it's already been killed. I mean, we've already hit this thing hard, and it can go down more, sure. Did they have a point here? Maybe. It's just a little late to the party for me. I think if you're a short Nike, you're coming back at a major support in the 50 area where you were up at major resistance 3 weeks ago at 60. So I would have liked to saw that article from Barron's 3 weeks ago when it was trading up at 60. That would have been the bold call. And that's when you would have seen it trade down a couple of percent. Now that everybody knows, Foot Locker's having problems and some of these other shoe stores having problems, and, Nike's obviously having problems because of that. It's kind of just repeating what we already know.
Yeah,
in my opinion.
I agree. The stock's gotten hit. I'm not out there buying it, but selling it in the hole here. 51, just under 51. That's been the low of the move, and did that in December, May, and June. So if you're looking to pick this up on weakness, look out under $51. Could be some bids there in Nike. We are getting a pop in Teva, Dennis. And,
yes, we are.
Give us that news on Teva, Spencer.
Teva has a new CEO. Carrie Schultz is the president and CEO. Comes from a Dutch healthcare company.
Well, 1765.
They wanted something changed.
Yeah.
I mean, they needed a change here. So applauding the change, I would applaud the change here too. I mean, the stock has been absolutely annihilated, cut in half in August, went from 30 to 15. So, any change is good. Is this going to make a huge difference? I don't know. BTIG Spinner saying they upgraded on this news, put a price target at $24. Stock's up 11% here in the pre-market. It's a big pop. It had a rounding bottom, it's around there 15. You know where your out is now, but you come in here today now, Joel, and you're going to buy it up 11%. I mean, now you almost got to give it to 15. That's got to give it a little bit too much for my liking.
Yeah. You had 4 out of 5 highs between 1747 and 1801. Pre-market high 1765. So I don't know. For me, a pop like this off that kind of news, I don't know, 17 and a half, 18 would be a sell zone for me if I had been, taking into this heat being long. We'll see how it reacts today. I mean, just the other thing that, these CEO replacements, if y'all can remember, GE, right? We got the big.
Can we just stop here for a second? What's happening in Citigroup? Citigroup getting killed right now.
Do we got news on Citigroup?
I'm hunting down right now.
Okay.
I'm watching Citi fall. I just watched it go from 60, but it's trading out. The financials were up significantly here this morning. All of a sudden, Citigroup's in the red. They've said something. All the banks just turned around and started going red here. A lot of them going red. They were up the most here today because we know the bank's getting a relief rally from Irma. And now I'm looking here. JP Morgan's trying to go red. Citigroup is in the red pretty hard here. Well, it's trading red now after trading up almost $1 this morning. Morgan Stanley.
Is it Fed?
Something got said by somebody.
They came out with some Q3 guidance right now.
Citi did?
Yes. This is the Barclays conference there this morning. They see revenue down 15% year over year.
Good scoop, guys. That's a quick finding that. So it's a good digging news desk. Citi, because I just start going down there. Wow. So Citigroup's trading in the red here now, $66. A lot of your banks are getting weak here this morning too. They were strong. They were really strong earlier. So not surprising if there's some news here out, obviously, that Citigroup taking us down here.
Yeah.
The other banks are showing a little following suit here a little bit as well.
Now that stock has just been strong here. Let's see. We just hit a pre-market low in Citigroup just moments ago at 65.75. Some volume traded there. Let's look on the daily charts right there. 65.68. That was your low on Thursday. 87 on Friday. So right there, 65.75. That's important for level to hold. Got a little bounce up to 66.20, folks, but 65.75. That's your 3-star level of support in the day in Citigroup. So great find there, Dennis and Spencer and Brent. Thank you. I also know there's some, isn't there some Fed participants speaking this week too? So that could be something that could be on your radar. But the first negative news really we had out this morning is the financials. Citigroup's your leader. So put C on the top if you're going to be following the financials.
And this is just coming out here now in the last few minutes. So still in price discovery phase here, guys. It's figuring it out. It just went green there. Now it's went red here again. So I don't know if it's going to drag down every bank. The other banks are trying to hold their gains. Like I said, they were up sharply on, the Irma not having so much damage in Florida as was expected. But obviously Citi has given an all back now. And some of the other banks like Bank of America this morning was trading up. Where was BAC, Joel, before this news broke? I saw BAC trading up over 1%.
Let me go to BAC here. That got it right up to 23. Looks like 23.27. That's your 23.25. This stock's been kind of quiet lately. Let's just take a look at Bank of America. It did get hit last week. The number, got two lows in the same area there, 22.75 and 22.86. So no real downside until we take out those levels with some volume off the open. And Goldman was real weak last week, but that got a little bit of a pop. And what else?
Goldman trade up to almost 220 this morning. It's given back $2 of it already on the Citi news. Citi's dragging them down.
Yeah, I mean, that's big news coming out. I mean, talk about interest rates and everything, but when these banks are coming out lower guidance, definitely take a note. 88, keep an eye on 88. JP Morgan, that was the low on Thursday. Wow, a lot of these banks had similar charts from Friday, Thursday and Friday. 88 is your level 2 for JP Morgan.
I do want to note that the Citi guidance came out of the Barclays Global Financial Services Conference, which runs today through Wednesday. That and the Morgan Stanley Healthcare Conference are the two big conferences this week. Both run today through Wednesday. Both can have market moving news come out of them. So keep an eye out for financial services and healthcare, sort of the two big conferences for the week.
All right, we don't have Fari. We hope you're listening. We hope we're doing okay, but we got another guest to fill in for Fari.
We got Sean Udall, tech stock strategist. He's the CIO of Quantum Trading Strategies. We're going to bring Sean on live. So let me do that right now. Let me dial Sean's number up.
Bringing him live?
Bringing him in live. He's out in Phoenix or somewhere in Arizona. Where is he, Joel?
Sean Udall's in Arizona.
Somewhere. Hey, Sean, how's it going? Spencer from Benzinga, Joel, Dennis
Good
here.
morning,
Pre-Market
Ben.
Prep.
Good morning, Benzinga.
How's it going?
That's good.
Are you out of your bunker yet from the hurricane? I heard that there were some projections it was going to reach Arizona.
That's really funny. No, I'm not too worried about it over here. It's funny. We do get some crazy monsoons, which will dump huge amounts of rainfall in a very short period of time. But they kind of built this place to withstand that. But yeah, no, as long as the hurricane doesn't hit Arizona and California, I think I'm okay.
All right, so I know you like to look at stocks. I know you like to get down to the nitty gritty. What's their cash? What's their exposure? I mean, what were you thinking, during these reinsurers last week? RE or R&R? Did you have the wherewithal to say, man, this is a little bit overdone, unless it's a total disaster, or it's just a little bit out of your wheelhouse?
Well, actually, this is something that I know a fair bit about because I was a risk manager for one of the largest insurance companies in the world at one point. I probably here's my problem with them. I followed these companies for years, and the biggest issue I have is that they've had a massive move over an extended period of time. So yes, they probably were a little overdone short term, but at the same time, I don't really think there's many. I mean, I remember when I owned Allstate a number of years ago as a $32 to a $37 stock. It's a $90 stock today. So if I were to look at the financial space, aside from trying to kind of make a short term hurricane is going to be less severe bet type deal, I just don't really see a ton of value in these insurers today. Now, not like it was. I mean, it was extraordinary value, even up to 3-4 years post financial crisis when they all got clocked. Even 3, 4, 5 years later, they were still really, really good buys. In fact, I mean, just to finalize the point, I would say most of the finance sector, except insurers, were really, really good value still until they had that huge post-Trump trade. So that, the last of the big finance stocks that had yet to kind of have huge moves, that big catch-up moves, I kind of think had them. So I'm not saying that finance stocks won't work, and I'm not saying there's still not value in the group, but there certainly isn't as much value as there was in November of last year.
All right, so let's find some value in the market here, and we got Twitter moving. We've been talking talking about this one, and we both.
You got me long too.
Yeah, we got you.
I'm long too. Twitter. I'm long Twitter right now, Sean.
Okay, well now, Dennis, I
you know me though, Dave.
Oh, here we go.
16. I hope you didn't load it after. Well, it's only moved to 1.5.
I just bought it.
It was a better buy at 16 than it is at 17.50.
I brought it.
Yeah. I mean,
17.
You hit your short-term target here.
Oh, go ahead, guys.
I'm long it. I bought the breakout 2 days ago at 17, so I'm long it right now. So I'm just saying it's going to be just a swing trade for me, but I think, I'm just looking at it there. It's getting a little bit of life here right now. I like when it starts showing some life. So I want to hear what Sean has to say, though.
Yeah, no, I mean, from an intermediate term basis, I still think that quarter wasn't nearly as bad as the stock reaction. I think the easy trade is pretty much back to wherever the stock was before they reported, which is roughly $19, $20. There are some. I would say, so my view has always been Twitter does not get sold. I still don't think Twitter gets sold. However, I would say there's more legitimacy to a Twitter buyout now than there was the last time the stock spiked. So, you heard some rumblings last week about Disney actually doesn't just want them, they might need them. I was a pretty good analyst who had that commentary. I could argue a lot more people need Twitter than just Disney. So if they got some M&A rumors swirling again, where my probability of Twitter were to be bought a year ago was near zero, I would say now at least have, half a coin toss, meaning roughly 20-25%. I still don't think Twitter gets bought. And I think their trajectory has been a lot better the last 2 quarters. So frankly, this is probably there's 2 stocks that really surprised me post earnings last quarter. One was FireEye, which is now starting to get going too, like 9 weeks after I think it should have, and Twitter. So I would say those are the 2 reports that could have really actually run that got pounded. So FireEye was 16.5 to 17, had a great quarter, and that's the most beaten up and cheapest stock in security. And they pounded them, and they're starting to work, and they had some good commentary again. They got a big upgrade last week, I think. So that stock's starting to catch fire, and Twitter is too. So I think it looks good. I think short term, a trade to like 18.5, 19. Joel and I were talking privately right at like 16.25, I think. And, I was already buying some, and he might have bought some around there, if not a little later, as an option play. But I think it sets up okay. They have to deliver another quarter, but hey, they delivered the last quarter and they pounded them. So it's just a weird. Sometimes these stocks trade unusually, and I think the Twitter and FireEye trades were very unusual last quarter.
And you said more than Disney could use them. They talked about Salesforce.com. Who else? Who are your other?
Yeah, well, I think you basically have 2 camps. The everybody who says Facebook and Google should buy them, those are basically the 2 companies that can't buy them because of DOJ anti-monopoly concerns. So, what 90% of the people say is kind of just BS. But if you're, we're in a situation here where in 3 years or 2 years or even 18 months, Google might be literally dominating global news flow. I could make a case it already is, but maybe that's not fully recognized. So, I don't know. Tell me what the top, 3 or 4 most powerful news organizations in the world are. All those publicly traded entities. So, if I was any one of them, I would have already bought Twitter. I still think the absolute best buyer for Twitter would be Apple. I don't think Apple would buy Twitter, but I think that is a combination that would be the most pervasive and the most powerful, because you for years you have Apple sniffing around search. I still think at some point we will see an Apple search product. But I think if you had Twitter inside of Apple, you then would have an Apple that would be able to challenge sort of all the big data, machine learning, that whole premise. All of a sudden, Apple would be a big data machine learning company, which, by the way, they already are, which they don't get recognized as such. CRM, CRM would love to buy Twitter. I don't know if they could swing the deal because I don't know if they'd pay the premium necessary. But I think the single best fit would be, to say, what are one of the largest 2 or 3 or 4 most powerful sort of news and media organizations in the world. And I think if any one of them were to grab Twitter, that would end up being kind of the de facto stock in that space, I think, for the next 3, 5, maybe even 10 years.
All right,
Sean, let's go back to the FireEye there, and let's just talk to cybersecurity stocks for a couple of minutes here. Jar was talking about it too. FireEye is starting to show some life here, FEYE. But you know what else is starting to show some life? Like a CyberArk, CYBR. That's just starting to come around after really getting annihilated there from its last earnings report. It's starting to pick itself up a little bit. Palo Alto Networks went the other way on their earnings and obviously got a pop there. But what are your thoughts here on these cybersecurity stocks?
Yeah, no, I like him. In fact, that was one of my calls pre-quarter that I thought this group would be one of the best reporting groups, and they really have been. I had some Palo Alto ahead of the print. I'm trying to think. I didn't really change my FireEye position, except that I bought it after the print. But I don't know. The only stock in the space I really dislike is the stuff that everybody loves, which would be something like a Checkpoint. There's a new company you guys should keep your eye on too, Okta, OKTA. Now they have an IPO lockup coming, but they had a blowout quarter. They tried to rate it, and the stock literally turned like 4 to 5 points intraday. So you could look at that OKTA, but very, very good company, interesting kind of niche in the security space. I actually like CyberArk a lot. Long term, it would probably be one of my top 2 or 3 favorite names. They did miss the quarter. In fairness, I'm not sure if CyberArk had ever missed a quarter, by the way. So they did miss I think they officially made the quarter miss the guide. But hey, the stock's a lot better buy here at 40 than it was at 50, and it was a relatively cheap stock versus growth at $50. So I think this could be a goer, and this name could be set up for M&A. I mean, this is another one I'm almost a little surprised somebody hasn't bought them already. But the company I just named, Checkpoint, officially did make a run for them. And my guess was they weren't willing to pay a big enough price to get the deal done at the time. That was probably like 4 to 6 months ago that I think Checkpoint publicly made a run at them. But yeah, no, I like it. The Palo Alto. I mean, there's even some like a VDSI is the name. That's Vasco Data Security. A name I traditionally don't like. It's almost too cheap to ignore here. But I'm almost trying to think. I don't really think there was a terrible report out of the whole space this quarter for the first time in probably like 3 or 4 quarters. So my guess is, guys, what's going to happen is as Palo Alto goes, the group sort of goes, and generally Palo Alto needs one helper. So if either FireEye or CyberArk or a Fortinet or another one of the bigger ones got going, that would probably be enough to get the space relatively hot again. Well, I mean, look at the Equifax issue, by the way. I mean, I think what's going to come out is they were not spending near the amount of money on security that they should have been, and probably didn't have a lot of these optimized solutions that are readily available for not that much money. Basically, is all of our financial data or social security numbers and stuff pretty much? I think almost every working person has a social security number with Equifax. So it doesn't take too many of those breaches to kind of highlight the importance of this stuff.
All right, let's move on to the Big Apple event here. Getting a pop up $1.83 at 160.46, up 1%. That's double what the SPOOs are up. How do you? I mean, long term, I think correct me if I'm wrong. You thought there's still some value in Apple, but it's not like a super cheap stock. How do you look at these kind of events, and give us your long and short term outlook for Apple?
Yeah, I'd actually be a lot more bullish on Apple if the stock was just lower. So I think I'm going to say the same thing I said last time. I love the stock between 90 and 100. I was aggressive on it pretty much ever since 145 to 150 plus. I've been writing calls on what Apple I have, and I've actually trimmed the position a fair amount. So yeah, I've had a long-term price target in the stock of 185. Here's how I mean, just to cut this short, because we're always short on time, I would actually play 3D sensing stocks as a play on Apple. Because one of the main features of Apple, I believe, and I'm pretty sure I'm going to be right on this, and it's not that it's that big of a secret anymore, is that Apple's going to have augmented reality technology in their phone. It's a fancy way of saying they're going to have 3D sensing chips embedded in those. Those kind of chips have been in gaming devices and automotive for the last few years. Well, guess what? They're making their way to handheld phones. So this is going to be the first Apple device with 3D sensing technology. You've got Lite, L-I-T-E, which is a name I've been on. I really like it. I've liked this name since 20. It's almost 60. I think it goes to 85 to 100. You have IIVI is another name in the space. You have Viavi, V-I-A-V, which has been dead, and they make one of the few sensors that anybody makes. It's a low margin product, but they have like the only one in the world. Infinisar, which just reported a pretty bad quarter because of 3D sensing. They actually had a manufacturing issue with their 3D sensing product, which cost them $15 to $18 million in a quarter. They basically need to get it requalified for the coming quarter. And that probably helps Lite short term and might help a couple other companies. But I would say if you're looking for an Apple play, you got to almost find something tertiary at this point. Another one I like is IDTI, that's integrated technology, that's a chip company that makes wireless sensing technology. And those are the two big new things I think are going to be in Apple devices, is going to be wireless charging and augmented reality / 3D sensing. I think there's way, way more upside in those names. Again, the biggest problem with Apple is, if it goes to 180, how much you really making? Unless you're really good on calls or something, there's just not that much more upside. Now, hey, I might be wrong. I've been a long-term bull on Apple. I think it's worth 180, maybe 200. what if it does something crazy and goes to 250? There's a chance. I'm staying long some of it because of that, but I like a lot of other things in the food chain much more than Apple itself right now.
We've been on the line with Sean Udall, Chief Investment Officer at Quantum Trading Strategies, a frequent Twitter out there on Twitter, giving some good information. Sean, thanks for coming on. We'll speak to you again soon.
And be safe, everybody in hurricane zones.
Okay. All right.
Thanks, guys.
Thank you, Sean. S&P's just hanging up here, Dennis, up 12.5 points, 24.75, $1.75 off the highs of the pre-market session. Much going on in imbalances here, Dennis.
Yeah, wild. There's some big ones. Now, individual stocks, it's going to be wild. GE has 145,000 to sell. We've seen that almost every day. It's up a little bit here. Deutsche Bank here had some commentary again. It seems like Deutsche Bank always seems to have some commentary.
What did they say?
Joel. They reiterate. So do you have the note, Spencer, from Deutsche Bank?
No, I don't.
Anyways, I just saw it go by on the highlight. I know that they were reiterating their downgrade, or they were not down, but they were reiterating their price target there. They put I think it's a $21 price target on it, and they also were reiterating the fact that they think they could cut the dividend. So Deutsche Bank started this party, and they keep pounding. It's the third time that they've talked about it now. They keep pounding the table. I mean, they've been right. We laughed at it because they kept saying it so many times. They've said it here again now. And, that could weigh on the stock here a little bit more. It's ugly on the charts, folks. You look at it here, it's 23.82 low on, or 23.58 on low on Friday here. It's trading here, and it's trying to hold on now. At a certain point in time, value investors do come in. It's a 4% dividend now. If they ever cut that dividend, though, they will crush the stock. Like I said, I've still got it in my investment portfolio. I still trade around it every once in a while, but it's still in my investment portfolio, and it's been there a long time. I'm probably sticking with it, but it's not as confident as I once upon a time was with this position.
All right, and
also, but in balance, man,
what do you got else in balances for?
Bristol Myers, 152,000 to sell. Pfizer, 108,000 to sell. Not sure what's going on there. Lowe's and Home Depot both have buy-in balances right now, and they've come up a little bit since that was posted. Home Depot, 102,000 to buy. Lowe's, 48,000 to buy. I would expect some big institutional money to come in, though, and offset that. I still think those stocks are going to open down. USG, 94,000 to buy. Again, I think some institutions are going to come in and knock that down. That's obviously construction material there. And we know if it's not as much damage in Florida, there might not be as much as they expected. And USG had a hell of a run last week. That stock went from $29 up to over $32. It is trading down here in the pre-market as well. I'll let you go into some technicals on a few of these. I just want to fly through a few more because there's a lot of them there. Alibaba, 101,000 to buy. Chevron and Exxon. Chevron, 37,000 to sell. Exxon, 42,000 to sell. These are all somewhat significant. Colgate, 38,000 to sell. Coke, 75,000 to sell. It could be a little bit of defense trade maybe coming off, but what I'm seeing really, and then obviously the reinsurers are catching bitch. Ace RTG, 43,000 to buy. UVE, 19,000 to buy already, and it's early. RE, which is a $236 stock, already has 13,000 to buy. That's up 13 points. So you're going to see some major movement on individual issues here this morning.
All right, and as long as the S&Ps are hanging up here, 24.75, I'm just trying to find a mid-range on the day, folks. If you're looking for an area where, like, hey, we may give some of these gains back, 24.71 is mid-range on this session. We did open up at the low print of the day, 61 even, so a little bit more of downside if that is taken out. I see crude still up 20 cents, and gold and silver, gold under pressure down 14.30, and silver down almost 30 cents. We get any thoughts on Wells Fargo here? Dennis had the bad news last week. We just had some bad news from Citigroup. I don't know. I just don't think you can get excited about
one of the uglier ones.
Yeah. And the reason is I just don't like this zone here from 45.5 up to 49 and change. I mean, you came down, you went up quickly through it. Bad news. I mean, it might break this losing streak. How many losing days have we had in a row in Wells Fargo? Let me check that. Well,
it looks like 4, but there was only one little green one, and then it looks like 7 of the last 9 have been red to me. I'm just trying to eyeball it. What you got? 7 of the last 9.
Actually, no. I see lower closes in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in a row. For the close, but if it
for the close,
from the closes, on the closing prices here, Low of the move, 49.27. So if you do, trying to swing trade like that, current low of the move is 49.20. Oh, you're looking on the short side here, Flack UK? Yeah. I mean, there's a lot of air here between 45 and 50. If you're looking at it for a stop, there's a couple tops here in Wells Fargo over the last 2 days, just above 50. So I wouldn't go crazy. I wouldn't let it get much above 50 if it turns around, maybe 50-10, 50-15 to stop. But this is a nice vacuum area here. We'll see if it can back it fill today.
Just jumping over here into some of the ratings, some of the notable ones from this morning. I do see Snap is getting downgraded at Deutsche Bank. They're putting a price target of $17, which is actually above where it's trading at right now. But regardless, they're still hitting Snap this morning. SNAP trading down about 25 cents in the pre-market. I played it long, Joel, once. I actually played it long again. I think I played it long on Thursday or Friday. I caught 45 cents in it. So wow. It was a nice little trade for me in Snap. It opened like right near the low. I think it might have actually been Friday. I think I was playing Snap. I bought the open. I don't remember why. Was there a ratings change or something on it? Anyways, I bought the open and it went up in 10 minutes, went up 40 cents. And I was like, I'll book that. So a nice little day trade for me on Snap at the open. What are your thoughts here, though, technically speaking, SNAP?
It looks like it's going to rally and then it just kind of gives it back. But I think as long as it stays above 15 here, let's see where we went out. 15.08 trading down 26 cents on a downgrade. I'm not fading this. I might fade it. I'm not shorting it in the hole here. The stock has had some decent move. Big move last week, almost a $2 range. Keeping an eye on Friday's low, 15.10. We are trading below it right now, but let's see, when some liquidity comes, if it can hold 15. Got all the way up to 15.80 on Friday before giving a lot of it back. It just, longer term, and I know you kind of scolded me when I talked to you about it before, like a 50% retracement in this thing. And let's go to a weekly. You went 29.50. Let's call it 11.50, 18-point move. So 9 of that, I don't know. Not getting back to
20. I put it back to $20.
Yeah.
I don't think it's getting there anytime soon.
Yeah, anytime soon. Analysts doing anything today?
Yeah. So Snap, they had downgrade at Deutsche
right?
Bank. Kroger catches a downgrade at Deutsche Bank.
Boy.
Deutsche Bank was busy here overnight. KR, they're downgrading. That's a little late to the party, too. KR has already been hit. But one thing I'll say, and I'll say it again, Kroger absolutely needs to hold the low that it made back on June 26th at 2046. If it takes that out, I'd be very scared and nervous if I was long it. It did hold that kind of on Friday. You could argue a double bottom, got down to 2041. That's the area it needs to hold. So we'll mark that 2041 as a bogey. It might test it again today with the downgrade, but I don't think so. I think it's late to the party. I think it's actually might hold above 2041 here today. Also, STX is getting downgraded at Jefferies. What about Seagate, Joel? When Western Digital was getting murdered, you came out there and you bought Western Digital. We know if we go to the charts, you bought almost right at the low when the stock was, I think, in the 39 handle. And you're still in it. It's up at 90 here now.
They're shaking.
Do you think about Seagate? It was always its brother-in-law, Seagate. It's been crushed here now from $50. 8% dividend here now on Seagate. Not sure if that's safe or not. Do you get tempted at all from a value investment here on STX?
I tell you mean swapping them out? It's definitely under consideration here. Just another consolidation period. So I think with this one, you made the hard bottom just under 31 to 30.60 low. This could be one of those scenarios where, okay, you're not going to try and buy it at 32 or 32 and a half with a 30.60 stop. But if it gets back above 34 and holds above 34, that was the last time it got wiped out, after last earnings report, then I would try and buy it on strength. The Western Digital, they were shaking me. I was using 80 as a stop. Spent 2 days under it, but came back. 90 looks like the major area of resistance in that one. But I don't know. Just getting a little tired of it, but I'll hold in there with the mental stop at 80. Spencer, what do we have?
One more before you go. MasterCard upgraded at Guggenheim. MA and Visa. These stocks, are they just unstoppable or what? I own MasterCard. Like I said, I've had MasterCard in my investment portfolio for a decade, thanks to Chris Banier. He was the one that talked me into it way back in 2007 or 2008, somewhere in the financial crisis. And I'm averaging at $16. I'm still in it. It's $139.50 here now. What are your thoughts? It just keeps going up.
I know. I told you to get out at like 80, 90, 100, 110, 120.
It keeps going.
Yeah,
I gotta find out when Chris is selling. He was the one who told me to buy it. I should say, well, I don't know if he's still in it.
He's probably out of it. 139.66 at your pre-market high, maybe 140, or maybe look to buy some calls. I mean, I think it might be a little late to party with this upgrade, but 139.66 at your pre-market high. Let me give you a pre-market high in Visa. All-time high 105.44. Let's see what's doing in the pre-market right there. If you want to sell the all-time high, it's right there in Visa. All right, Spencer. Now you can wrap up.
I have one more rating.
Okay.
It's sort of like a double upgrade. Underperformed to buy. Bank of America upgrading ATI from underperformed to buy. So sort of like the double upgrade there.
Boom! They're right from the lower end right to the upper end.
Yep.
One mighty blow. Did they say why?
I don't have the note in front of me, so I don't know. But
up 5%, big pop here this morning, Joel.
Yeah, just keep an eye on that double top, folks, at 21, 84, and 85. If in fact we can even get there.
I think it takes it out.
You think it takes it out on a big?
It's a big rating change. I think that's worth at least.
I'm not going to fade
you. I think
you're too hot. I'm not going to.
We could do a bet. I think it trades. I'm going to look at the book as I'm doing. I'm trying to use all the information I possibly can. ATI does have 7,200 shares at 22.
I think
it kissed 22 today.
I don't think it closes over 22.
21.57. I think it closes over 21.57.
Spencer,
that's fair. That's what's at right now. That's the fair bet.
But you already said you think it's taken out 22.
That was good.
Spencer, would you please wrap up this show?
that was good, Dennis. That made me laugh. All right. That is it for us today, folks. Keep in mind some of the stocks we spent talking about in the first half of the show. We're going to see how this trade plays out today. REHCI, HRTG, RNR, AHL. Keep those in mind this morning for the first half hour or hour of the day. We're going to sort of watch this trade play out and see what happens. We'll talk about it all tomorrow. So if you want to catch the whole show again, you can do so on our podcast on iTunes, SoundCloud, and Stitcher, or catch the whole show as it aired live on youtube.com/Benzinga TV or on our Facebook page at PreMarket Prep. So that's it for us today. Have a good weekend, have a good rest of your day. We'll be back with you folks on Tuesday.